Good afternoon, everybody. I trust you can hear me. But anyway, throw a one in the chat if you're
In
watching me
100
live.
feet, keep left to North 71st Street.
Throw a two in the chat if you are watching the replay. Okay. So happy Saturday to everybody.
The expected delay due to traffic is 1 minute.
Yeah, she gonna do this a little bit, y'all, because I don't know my way to where I'm going. Even though I've been there a couple of times. But anyway, all right, so I did this the other day. I started it and I got cut off and I couldn't finish. So I'm going to finish the info I was giving y'all the other day. So, as you guys know, I help people with their personal credit. I help people with credit repair and restoring their credit scores. Please understand that restoring your credit scores or establishing credit scores is a separate process from credit repair, but they need to happen simultaneously at the same time. Taking negative items off your credit report would not increase your credit score by itself. So this is why you must also do things to increase your credit scores. And how is that done? We'll talk about that later through the trade lines. But right now, I want to talk a little bit why people credit scores drop. Okay. And this will happen from time to time. Credit scores do fluctuate. But the one thing I need y'all to stop doing is looking at stuff like Credit Karma, and you want to get up in arms and say, my credit score dropped 40 points. No, it didn't. Your Vantage score dropped 40 points, not your FICO score. And I'm here to tell you that no lender lends off Vantage scores. Lenders provide cash, capital, monies for you to do whatever you need to do based on your FICO scores. Nobody takes a Vantage score. Unfortunately, Vantage scores most of the time are higher than your actual FICO. That's because the 6 factors that make up your Vantage score, that calculation, that formula is actually different than the 5 factors that make up your actual FICO score. Now, Vantage score are more favorable consumer wise, but nobody takes those numbers. So I need y'all to stop looking at Credit Karma and crying, talking about how your credit score dropped, because it may not have dropped for real when we talking about your FICO score, or it may have dropped 2 points. And if it has, there's reasons for that. But just to know that FICO scores, credit scores do fluctuate. And I'm gonna talk about a few things and elaborate on a few things just so you can understand a little better about your actual credit scores. Now, don't get me wrong, I like Credit Karma because it is a good tool for for showing you what's on your credit report. It's not good for the actual scores that's on your credit report. And it only shows two of the major credit bureaus. It doesn't show all three. That's what matters. Okay? You need to know what's on all three of your credit report. So to help you stay educated on your credit is to pull your credit report at least once a year. You can do it for free at annualcreditreport.com. You can do that once a year for free. That's all right as consumers, everybody. All right. So if you're working with me with your credit, um, we'll go further into that as well. But let's talk a little bit reasons why credit scores drop. Okay. Let's start with the fact that a new account could have been added to your credit profile. Okay, so open up any type of new line of credit could drop your score maybe a few points. It is what it is. But the good thing about it is, if a new account was added to your credit report, then now you have a new trade line. So by having the new trade line, that's going to help your credit, because what's important is you making your payments on time. And remember, timely payments is 35% of your credit score. Okay. Okay, let's talk about something that will basically seem like it's a harmless thing or not that big of a deal, but it will do.
In 1/4 mile, turn left on North Lansdowne Avenue.
It will jack up your credit score like it's in the fight with Mike Tyson. Okay, like you in the ring with Mike Tyson. I don't care how long it's been since that man have not boxed. Nobody want to mess with Tyson, right? So late payments will kill your credit score. Even one late payment can hurt your credit score. And
In
one
300 feet, turn left on North Lansdowne Avenue.
one late payment undoes 3 timely payments. One late payment takes 90 days to recover from. Okay? So if you had a late payment, fine really as being more about 30 days late, 30 or more days late, because things don't get reported to the credit bureaus until after 30 days. So even if you pay something late on your credit card and they assess you a late fee because it's a couple of days, that's something for them to make more money off you. It's not late with the credit bureaus until it hit 30 days. But what I need you to understand is even that one late payment is affecting your credit every 30 days. So it can continue to drop. Are there ways around late payments where you can get it taken off your credit report? Of course it is. Okay. You want some more info about that, make sure you contact me. Oh yeah, and as far as contacting me, you can inbox me, you can comment below. You can also text me 844-243-4901. Okay, text credit to that number. All right, so yes, please understand anytime you hurt your credit, even if one little mishap like a late payment, it still affects your credit every 30 days because that's going to sit on your credit for months, years. Okay, as stated, it takes 90 days, 3 months to recover just from one late payment. So that's why it's very important to pay your bills on time. But there are ways around that. Okay, let's see here. So another thing that can drop your credit score is increasing your credit card utilization. And let me explain that because people think if they keep all their credit cards at 30%, they cool. That's incorrect. You want to keep the balances combined at 30% or low for all your credit card limits. Okay? And the example I like to use for that is let's say you have 2 credit cards with a $500 limit. Five and $500, that's $1,000, right? So if you have those 2 credit cards, this means that your balance on each card should be no more than $150. So let's do the math. 150 plus 150, that's 300. 300 of 1,000, that's 30%. Ding, 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 ding. So that's how you keep your balances low. That's where your balances should be. So no, it's not 30% for each card. Okay? It's 30% of the total balances compared to the total limits of your credit card. So, rule of thumb, keep your balances of credit cards between 0 and 9% if you can. Every time there's certain thresholds that passes for your credit card balances, and every time you either go above those thresholds or come below those thresholds is when your credit score changes. So of course, if you're going above the credit scores threshold, the credit limit thresholds, then that's increasing your utilization, which will eventually drop your credit score. And anytime you're coming below those credit scores, which is going to drop your utilization and increase your credit scores eventually, okay? And normally it takes like a good 60 days before you start to see big changes when it comes to the credit card utilization because they take a little time to catch up. Like the thing is, like, one thing I will say about Credit Karma is when you make good changes or bad changes, Credit Karma picks it up very quickly if you've ever noticed it. Not the credit bureaus. Sorry, it doesn't work that way with the credit bureaus. It takes them a couple of months to catch up. I'm sure that's done on purpose, right? I'm going as far as to say that is done on purpose, but that is what it is. but let's keep our credit straight. But that's why you got me to educate you. Okay. So then another thing. Oh yeah, another negative, another con that comes with you using too much of your credit cards is the credit card companies are good for decreasing your credit limits when that happens. It's happened to me before. So I know, I know personal and educated experience, y'all. So let's say your credit card balance, you got $10,000 credit card balance. You start using, you got 8,000 eventually, and you can't get it down. Eventually, that credit card company, they're not going to close it because they're seeing you are using and you're paying, but they will decrease your limits, and that is like being caught between a rock and a hard place because they are now you got less space, right? So because you're decreasing your limits, you have less space, and what's going to happen? That means your utilization rate goes up, your credit score goes down. Y'all follow me? So keep them credit cards balances low. Keep those balances low, okay? All right. So another thing that would drop your credit score are closed accounts. Okay. Now, these are the type of accounts, and then with closed accounts, what can happen with closed accounts? Let's say if you don't pay something, and it's been 30, 60, 90, 120 days, it might go to collections, it might get charged off, but eventually they're going to close that account. So that can drop your credit score. And another thing that people don't know is your credit score can also get dropped because you paid something off. Because you pay something off, now it's a closed account. But sometimes you got to take that. I mean, say if you've been paying on the house for however many umpteenth years, now your mortgage is paid off, you're mortgage free, but now your credit score done dropped because of that. Yes, that happens. It happens. But people ask me like, wait a minute, I just paid off my car. 3 months later, my credit score dropped. Shouldn't my credit score go up because I paid something off? No, your credit score goes down because now it is a closed account. Like you didn't go and buy another car, you didn't go and buy another house. Like remember, these are all trade lines: car payments, house payments, personal loans, credit cards, stuff like that.
In 1/4 mile,
These are
turn
trade
right on
lines.
West Baltimore Avenue.
These are trade lines to help increase your credit score. You pay it off, and now your credit score went down. So that can happen as well. Another way your credit score can drop is having old accounts removed from your credit report. Now, if that's something that's weighing you down, like for example, you got the student loans when you were 18, but those student loans defaulted, right? Go through the credit repair process, and I help you get student loans off your credit report, right? We help you get student loans off your
In
credit report.
300 feet, turn right on West Baltimore Avenue.
Now you happy you got that defaulted account off your credit report, but because that was 15 years ago, that took away some age history from your credit report, which that can happen, and that will cause your credit score to drop a little bit. But that's why it's so important to have these trade lines, because that's going to counter it. Okay, so people still say to me, oh no, I don't have any credit cards, I don't want credit cards, they do this, they do that. And it's no coincidence that credit cards are the #1 ways to increase your credit scores. Okay, that's why I talk about it so much, y'all. But yes, having old accounts removed from your credit report can drop your credit score. But that's why I need y'all to understand that your credit report and your credit scores, although they do go together, they're like two separate entities. All right. And as I stated, both of them need to be worked on at the same time. Okay. Next thing, of course, I just mentioned it a little bit, is an account that you didn't pay on either went into collections or it was charged off. I mean, that's pretty much self-explanatory. Typically, after like 4 months of not paying something, that company is either going to put the account in collections and charge it off as well. So they losing out on money, but it can be taken off of your credit report. All right. So you paid an account off. I already talked about that with closing accounts. And then another thing that will drop your credit score, and I see people do this all the time, New credit inquiries. Here's the thing. One or two inquiries, even though it could drop your score a few points a piece, this is what I see people do. Your credit sucks. You know your credit scores are in the 500s, yet you try to go get a car. Do you know that when you go to a car dealership and they are looking for a lender to give you a loan for the car, they will run your credit for each lender. And because your credit score is bad, your credit report jacked up, and or your credit report is jacked up, they're running your credit. So to date, the most inquiries I saw on somebody's credit report was 98. Before that, it was only like 56. I saw 98. So here's the thing. Like, okay, so you know you have bad credit, but yet you're gonna go try to go get a car. You think to myself, oh, somebody will lend me. Somebody may just lend you something with a double digit, and I'm talking about 20 something interest rate. You'll never pay that car off. Oh, or you need a co-signer. So you get a co-signer, and now that's on their credit report as well. So if you have a co-signer or you have co-signed for somebody, please know that that's your car payment as well. Meaning whatever the owner of the car do or don't do will affect your credit score. Like people talk to me, I talk to people when I'm doing consultations, and they say, yeah, co-sign for a car, but that's not my car, and it's on my credit report. Yes, technically, when it comes to the actual loan of the car, yes, it is yours because you co-signed. You said I'm taking responsibility as well for the payment of this car. Remember, the car is the collateral that you put up for this loan, okay? And what happens if they miss the payment? 30 days, 60 days, 90 days. Y'all know after 90 days, they come to get the car. So now we're talking about a repossession. So you got a late payment and a repossession, which pretty much shows up like collection. So guys, don't co-sign unless you're actually doing a co-signing thing to actually help increase somebody's credit, which means the second person everybody needs to be responsible. Okay, so you can do that, but I would say only do that with a responsible party. Okay, but yeah, don't buy and pay for a car for somebody. Don't do it. But we talking about you in a car note for at least 5 years, 6 years, and what if they refinance?
In 800 feet, arrive at 30 East Baltimore Avenue.
If they
on the left.
refinance, now you done change the terms of that contract, and then you could be paying on the car longer. Just guys, be smart. And I truthfully speaking, I don't recommend that anybody co-signs for other people, but sometimes people can't get cars without it. And don't be on the be.
In
And
100 feet, turn left, then turn left
all right.
on North Diamond Street.
I'm already here, sweetheart. Okay. I've seen it where the co-signer basically need a co-signer, and I haven't seen a co-signer get another co-signer. But what I'm saying is, you get somebody to co-sign for your car, and that person got bad credit too. So, guys, that's my information for now. Thank you so much for joining me. As stated, if you need help with your credit, or if you have clients that need help with their credit, please comment below. Send me an inbox. You can text me at 844-243-4901. Y'all see this right here? Because when I am not only do I help people and all that stuff, I also educate. Y'all see what this says? I'm always advertising. Always advertise your business. I don't care who don't like it, y'all. Y'all business owners out there, care what business you do have. I don't care if you're selling chips on the corner. Advertise, post, do all that stuff. I don't care who don't like it. Like what that thing say, prepare to be sick of me. Yeah, you won't be sick of me, and I don't care. Okay, and neither should you. Advertise your business, promote yourself. If you out here educating the masses and you are helping people, keep going. Don't let nobody stop you. Y'all have a good day.